Good afternoon. This is the online tutorial on Unit 5. The first question, a lecturer wants to make some investment. He chose commodity future. In the year of 31 March 2019, he made a gain of 120,000 in buying and selling the cotton future in Hong Kong Commodity Exchange. Now the question asking to list out all the factors which is relevant in determine whether the gain is chargeable to profit tax or not, and ask you to briefly explain. Okay, before you answer this question, first of all, you need to identify or define what is commodity futures. In order to answer the questions. Okay, but no matter how, when you find out all the factors, you should discuss on those 6 batch of the trade and the other relevant factors. Don't just discuss on the 6 batch of trade only. Okay, and most often we will start with the 6 batch of the trade, and the first one will be the subject matter, right? Okay, that's why you need to know about what is the assets related to the nature and also the quantity. Okay, first of all, about commodity future is what kind of the things? It's a kind of instrument, financial instrument, and that is used to hedging the price fluctuations in the raw material, and most often that is being buy by some of the manufacturer in order to hedge the fluctuation of the price of some of the raw material. And this commodity, the common type of this kind of commodity futures like iron, soybean, cotton, and there is some of the typical example. And because of that, you will find that the nature of these assets is mainly for the manufacturer used to hedge the fluctuation of the price of the raw material. And because of that, by looking at the question about a lecturer want to make some investment, okay, and a lecturer is not a manufacturer, and because of that, it is quite difficult for him to argue. Just use it for hedging the price of the fluctuation of the raw material. He buy it for investment. It is also arguable. It's just a sell statement only. And how to prove it? Because that is in his mind only. That is related to another factors. This is the motive. And I mentioned this for investment. How to prove? For an individual, it's difficult to prove, right? And for a company, it may be much more easy. You can refer to the minutes or the memo or their email or even their accounts to look into those informations. Other than that, any special circumstances we cannot identify, uh, leading to the disposal is difficult to argue also, because the question doesn't provide any. But no matter how, you may mention this part. That is one of the uh, uh, considerations. And other than that, and we will look into about the other factors like the frequency of the similar transactions. By looking at the gain, 120,000 is not a small amount, right? In order to earn so much money, either this lecturer buy a lot of the amount, buy a lot of these commodity futures, and or he buy very large amount of the value. Okay, that's why either he trade so frequently in a small amount, or he buy a large amount in order to earn so much money. If he just buy a small amount, and that means he buy many times in order to earn so much money, and it illustrated that he have a frequently similar transaction on commodity futures. It also possible uh, assume that he will be trading this kind of things. And for the other factor will be about the period of the holding. And if he trades so frequently, it's so simple. Within a year, he earns so much money. The period of holding such kind of the cotton uh, commodity future may not be long, very short. And as we all know that the shorter the time, the more likely that will be trade, right? And other than that, the question doesn't mention any supplementary work have been done. That's why this is difficult to discuss on that. But you should also mention these factors, and also you may explain on that. Okay, if there is any special circumstances or supplementary work have been done, and then you may argue on whether that is trade or not trade. Okay. Okay, other than that, you may discuss on the other factors other than the six pack of the trade. For example, whether this person have professional knowledge on that kind. As a lecturer, if this lecturer is teaching finance, investment, then possibly he have the professional knowledge, and he may also illustrate that he is trained on that kind of the things. And other than that, how he get the money to buy the commodity futures, how he finance. If he borrow money from the bank and then buy those commodity futures, that means he may not keep it for long because he bear a very high interest rate, and that's why he should sell it away within a short period of time in order to release his interest burden. And that is also one of the key things you may mention. And where is the money finally after he sell the commodity future? How is the sale proceed are being used? If that is also used for repurchase another slot of the commodity future, that may also prove that he is trade on that kind of the things. But no matter how, all will be based on the facts, both based on the matter of facts. Okay, and you may discuss all that uh, uh, for the arguments. Okay, and other than that, you may also find out any other factors that is related to discuss. Then second questions. Okay, determine whether the foreign income earned by a corporation carry on retail business in Hong Kong is taxable, and briefly explain. Now, by looking at the question, it's about a corporation carry on retail business in Hong Kong. That is a Hong Kong company, right? Okay, now about the five different items, whether that is taxable or not, you are required to explain also. Okay, the first one, profit on sales of goods in Hong Kong. Is it taxable? Now, don't jump to a conclusion so quickly. Okay, you should discuss on how to determine whether an individual or a corporation is subject to profit tax. According to Section 14, there are three things, right? And first of all, that should be someone or a person just carry on trade, business, or profession in Hong Kong. And out of this trade, profit are being derived, arising in and derived from Hong Kong. Okay, and you also make profit. That is the three conditions. And among these three conditions, by looking at A, you have profit, right? And also there is about the sales of goods in Hong Kong. And because of that, all these three are fulfilled. This means this company is carry on business in Hong Kong, and also you have profit, and also those profit is arising and derived from Hong Kong. Then you can make a conclusion that should be taxable. Okay. That's the second one is the rental income, and about the property is located in Shanghai, and you may receive rent. Okay, you rent it out, and then you receive the rental income. Okay, then you may discuss on the locality of this uh, rental income, and according to the DIPN 21, okay, the locality of the rental income, whether that will subject to Hong Kong profit tax or not, is based on what? It's based on the physical location of the properties. I used to mention these key things. Okay, according to the Hong Kong territorial tax concept. Okay, that may not be taxable. That will not be taxable. Should not be taxable. Okay. Okay, then the third one is the profit on sales of motor vehicles used for delivery of the goods. Now, this motor vehicle is for what? It's for delivery of the goods. It's what kind of the assets of the company. Now, we have two kinds of the assets, right? One is current assets, one is capital assets or fixed assets. And for those assets, it's used for productions or for the company to provide service or whatever, generate the future economic benefit to the company, that will be belong to the capital assets or fixed assets. And if you sell this kind of assets away, and the gain, all of these assets is a capital gain. As we all know that Hong Kong doesn't have capital gain tax. That's why this profit will not be taxable, not taxable. Okay, you should mention this. Okay, number D, dividend income from a listed share. Okay, and you will find that according to the DIPN 91, if the dividend is out of the listed share, that will be based on what? Based on wherever is the share is being traded. And by looking at that, it seems that this listed share should be in Hong Kong. Okay, if that is in Hong Kong, it may be taxable, but because this company is not an investment company or financial institution, and it's a retail business in Hong Kong, carry on retail business in Hong Kong. That's why it's so simple for this listed share. Most likely that will be the investment of the company, and also this dividend is being paid out of a taxed profit, okay, of another company. In order to avoid double tax, dividend will not be taxed, And also one more, according to Section 26, that will be exempted also. Okay, there are three in total. One is avoidable tax, second is a capital gain, and fourth one is according to the ordinance. That is not taxable. Okay. Okay, the last one, the UK company sells profit of machinery to a Hong Kong company. Now this one, looking at that, is about the UK company sell machinery to this Hong Kong retailing business, and this UK company earn profit, and whether this UK company will subject to Hong Kong profit tax or not, and you will find that we have two kinds. Okay, it's trade in and trade with Hong Kong. By looking at this one, now you should prove this UK company should be trade with Hong Kong because it doesn't have a permanent establishment. Okay, that is those key thing you should mention. Okay, permanent establishment is the key thing to illustrate whether this company is trade in Hong Kong or trade with Hong Kong. Okay, as this UK company doesn't have any permanent establishment in Hong Kong, it's just trade with Hong Kong only. And because of that, according to Section 14, okay, and that should be arise in a device from Hong Kong, right? But if that is just trade with Hong Kong, and you just sell machinery to Hong Kong company, earn profit from Hong Kong, but those profit is not trade in, it's trade with only. Okay, because of that, that will not be taxable. Okay, number 3, about a manufacturing company. Subcontract manufacturing work to a factory in Shanghai PLC, and this ABC company will supply raw material only, and the PLC will provide the land and labor and control for the manufacturing process, and discuss on the profit of ABC. Okay, now for this one, I used to discuss on there are two kinds of the processing, okay, manufacturing processing. One is contract processing, and the other one is import processing. And used to discuss on that. And finally, and for this one, you will find that this company just provide this kind of things only. It seems that this ABC company involved in the manufacturing process is minimum, it's very little. And also, we don't know whether this supply of the raw material, whether this company will charge the PRC company or not, or and also whether the concerning price is at arm's length or not. And other than that, you will find that for contract processing, most often the Hong Kong entity should involve a lot and it should provide a lot of different kind of the other things to the PRC. For example, like the technical know-how and also the machinery and also finance or money. But for this case, it's quite minimal. And because of that, it is possible that it is just an import processing rather than a contract processing. Although you mentioned you subcontract it manufacturing work to the China entity, but it is all the also a matter of facts. Okay, we need to find out and also whether any other thing the Hong Kong entity have involved. But surely that by looking at the question, it just involve a minimum, and most likely that may not be sufficient to count for a contract processing and count for the 50/50 base of the exemption. Okay, and you may also discuss on for import processing, basically that is a trading profit, and there is no apportionment, either fully taxable or fully taxed. And Hong Kong company is just seem to be trade on the raw material and trade on the finished goods, and that's why there is a trading profit, not a manufacturing profit. You should discuss all that, okay? And then finally, and possibly you may make a assumption on that, okay? Whether that will be subject to Hong Kong profit tax or not. Okay, and the fourth one, and there are 5 different situations. Okay, for the first one is about the U.S. customer A. Fax a purchase order to Hong Kong, and then ABC company accept the purchase order in Hong Kong and fax a sales confirmation back to the U.S. customer A. Now, by looking at that purchase order, Hong Kong, and then the sales confirmation is also in Hong Kong, okay? And you will find that both are being enforceable in Hong Kong. Both contract, purchase and sell contract are being enforceable in Hong Kong. And because of that, you will find that that should be taxable, okay? Because all of the purchase order and the sales contract and those effect in Hong Kong, okay? And because of that, that should be taxable. Okay, second one, and that will be another customer, U.S. customer B, send purchase order to Hong Kong, but does not require any acknowledgement. ABC company approved the order on receipt in Hong Kong, but does not issue sale confirmation. It then sent a fax to the Chinese factory instructing them to manufacture the garment and ship them directly to United States. Now, by looking at that, it seems that it doesn't involve anything in Hong Kong. It seems to be right, but no matter how, by looking at this one, all these things, the purchase order and also the instruction, are all from Hong Kong. And no matter how, by looking at that, the order is accepted in Hong Kong, and also the purchase order are being issued in Hong Kong to the Chinese factory. Because of that, that should be related all in Hong Kong. Those sales profit should be taxable in Hong Kong also. Okay. Number C, U.S. customer C send a buying manager to Hong Kong once a year. While in Hong Kong, he signed a sales contract with ABC for supply the garment. Now you'll find that this buying manager to Hong Kong, and then in Hong Kong he signed a sales contract. Okay, so simple. But looking at that, the sales agreement are negotiated conclude in Hong Kong. Surely that should be fully taxable. Okay, then number D. The sales managers of ABC company visit United States and sign a sales contract with United States customer. And then the sales manager inform the buying manager of the new order. The buying manager go to China and negotiate the purchase of the garment from the Chinese factory. While in China, the buying manager sign a contract to buy the garment. Now, looking at that, and you will find that the sales contract is signed in United States, right? And then the purchase contract of the garment is also signed in China. And both the sales and the purchase contract are in United States and in China. There is nothing in Hong Kong. And because of that, this scenario, this situation will be non-taxable. Okay, because you will find that both the sales and the purchase contract are negotiated outside Hong Kong, and because of that, this sales profit will not be subject to Hong Kong profit tax. Okay, the last one, ABC company appoint a United States company as its U.S. agent. The agent is authorized to negotiate and conclude the sales contract on behalf of ABC company. The agent fax detail of the order both to ABC company in Hong Kong and to its Shanghai buying office. The Shanghai office ordered the garment from a Chinese factory and shipped them to United States. Now, by looking at this one, and it seems that the Hong Kong company doesn't do anything, and all this is because of this U.S. agent. Okay, and this agent act on behalf of the ABC company. And also this agent fax those details to the China, okay, to the Shanghai, China, to the buying office. Okay, and because of that, you will find that this agent, okay, act on behalf of all the things for the ABC company, right? And those things, those profit earned by this agent will not be subject to Hong Kong profit tax. Why? Because it seems that those contract of the sales and the purchase contract is nothing happening in Hong Kong also. And also, the Hong Kong company doesn't do anything. And because of that, um, the Hong Kong company ABC will not be required to pay any profit tax. Okay, just the agent. But this agent doesn't carry out any duty or service in Hong Kong. And because of that, and you will find that this foreign source is all outside Hong Kong. This sales contract, purchase contract. One is China, one is in United States, and all outside Hong Kong. And because of that, that will not be subject to Hong Kong profit tax. This agent, right? And but if let's say if the agent, okay, pay some commission back to Hong Kong company, and then this Hong Kong company receive this commission, is it necessary to pay Hong Kong profit tax? Now you will find that if arranged in this way, possibly, this commission may not be subject to Hong Kong profit tax. Why? Because we will saying that this is a passive income. Passive income. The Hong Kong company doesn't do anything, but the agent do all the thing, and then it just give a commission to the Hong Kong company only. The Hong Kong company doesn't involve anything. Okay, and that is a passive income, which is different to the active income. Okay, and but for the agent, okay, the agent make those sales profit should not be subject to Hong Kong profit tax. Okay, um, that will be the last item. Okay, if you have any question, you may ask me in the chat room. Okay,